Welcome to how to use Bollinger Bands to trade options. Simple lesson today. In fact, this is just a little bit of a tip for you to scan for Bollinger Bands when buying options. You could do this with calls. You could do this with puts. I don't do this with option selling, although you could. But the point here is to make a lot of money. These could be really big money makers in a very short period of time. So real quick review on options in Bollinger Band. So I start with the underlying chart. So, okay, we're looking at CXP here. And what I do is I scan for Bollinger Band squeezes. Right? And a lot of trading platforms have ways that you can scan for those. So that's the first thing I want to do is scan for Bollinger Band squeezes in the underlying market, meaning the stock. By the way, you could do this with options on futures, Forex, anything. So the key is first to start here. That's step one. And as you can see, with Bollinger Band squeezes, what we're looking for is where the Bollinger Bands, the upper and lower Bollinger Bands, get close together. So here, and we're at it right now with this stock as well. So it's a current example. So what does that mean? Well, it just simply means that the market has a cycle or period of time where it'll go from low volatility to high volatility. So low volatility here, cycle. Oh, cool. And then we get into high volatility period of time, moves out of there. And then we go back into a low volatility period of time. And then we go back into a high volatility of time. Then we go back into a low volatility cycle or period of time. And so the play here is to enter when we're in low volatility. We're not going to wait for the breakout. We actually enter during low volatility. Now, why is it so important to do that, especially with options? I mean, you can do Bollinger Band squeezes with stocks and futures and Forex as well. But with options, you actually get an extra benefit out of trading during low volatility periods of time. And that's because options are multifaceted in their pricing. So if this thing breaks down, as it's already starting to do, and we get another big move on this where we go into a high volatility period of time on the stock, we'll make money and just say we're going to let's keep it simple from the option side right now. There's many different strategies you can do, but just to keep it simple, let's say you buy a put. So you're going to make money on the movement, and let's say you buy an in-the-money put, so that you're eliminating a lot of the premium, maybe not all of it, but basically using the option as a proxy for the stock, and a little bit of premium in there, but the option price will move pretty much in concert or more in concert with the price of the underlying if you eliminate some of the premium that's involved in your price. So one or two strikes into the money. And then, so you're going to make price on the move of the underlying stock. But as I said, options are multifaceted in their pricing. And another major aspect of the pricing of options is implied volatility. So we'll make money two ways. This is a two-for trade. And this is why you can make so much money with them. So the price of the stock goes down, the price of the option goes down. Of course, we're buying a put, so that increases the price of the option. It's like shorting a stock, essentially. You're betting on it going down. And then also, if volatility comes into the market, just like it did here, we get into a low volatility cycle, and then it goes into a high volatility cycle. Then your implied volatility on the option can go up. And that's why I said it's a twofer. You're making money on the stock move and you're making money on the increase of volatility, the volatility pricing aspect of the option. And that's why I like these so much. Now, having said that, it all sounds great, and it is great. But let's give you some caveats to look out for as well. So you also don't take this alone. Then when you see this is awesome. You start here. Step two is you go to your option chain. And then you make sure that you look at the actual implied volatility of the option that you're going to trade, or look at several of them. And look for low volatility. Is implied volatility low compared to historical volatility? Okay, that would be one sign. We're on the percentage rank. Is it the percentile? Where is it ranked there? And make sure, and then a third thing, I'll give you a little quick tip here too. If it's trending up, if it's low, we want low volatility to start, but if it's trending up a little bit, that's great, because we actually don't want just low volatility. Believe it or not, even if this gets a breakout to the downside like this on the price, the IV can still stay the same. So again, we're just playing the odds. We're looking for an edge here, and you can't control what IV is going to do. That's what the option participants expect the volatility to be in the future. So, but to give us a little extra edge there, hey, if the IV is already low and starting to trend up, well, just puts the odds on your side that way even more. So now we're trading the trend of the price action. We're trading the price, or trading the trend of the IV. And that IV will add to the price of the option. And that's a beautiful thing. So anyway, little tip there. Again, feel free to, I've got an options course for you that I'm going to give you for free. And it's at the cleverly named URL of freeoptionscourse.com. I'm very creative with these URLs. Yeah, freeoptionscourse.com, absolutely free. Go there. There's videos that go into much more detail than this. Like I say, this is a little tip. And I go through in those videos some of the very unique things that I do with options. So we focus mostly on the stock here. Didn't go, pull up an option chain or anything, but in those videos, I do go into option chains. I do go into where you're going to find edges and advantages in looking at where the big money is coming into options, where the professional money is trading, as well as probability of profit, all these different things that make options, well, for me, my favorite trading financial vehicle, because, well, they're so powerful. And when you look at all these things that you have, all these tools and statistics that you have with options that you do not have with other financial vehicles, well, I think you might just fall in love with options as much as I have. So that's it again. Hey, by the way, if you like the video and you like the videos that I'm putting out here on YouTube, give me a thumbs up, subscribe so you get notified of future videos, and make comments below. Any comments you have below. I know there's a lot of seasoned option traders here on YouTube. Feel free to type in your comments as well, maybe helping other people watch this video, giving them some extra insights. Love to have that. Like creating a little bit of a community here and people helping people. So that's it. Enjoy, and I wish you happy trades this week and every week for the rest of your life.